Howdy folks, it's Dr. Jeff Camarda with a midsummer word from Jeff called Will Iran Torpedo the Stock Market? Threats multiply for the longest bull market ever. Now, modern times have certainly got more interesting. Robert F. Kennedy famously attributed the thick-faced, black-heart saying of "May you live in interesting times" to the Chinese curse of wishing trouble and turmoil instead of peace and tranquility. Now, the Chinese connection is actually rather dubious, though it is deliciously ironic, and the actual the origin of the phrase is hopelessly murky. But perhaps the expression, I'm guessing, comes from the Persians, whose descendants incandescently now rule Iran in the present age. The Iranians have without question ratcheted up the interest gauge over the past few months, beyond the last count probably brazenly attacking at least a half dozen oil tankers and threatening to shut down the very strategic Hormuz Strait near its shores in the Persian Gulf, through which over a third of world oil supply must pass to get to market. Iran's also stated that it will resume the production of nuclear weapons-grade uranium in a matter of days if its economic sanctions relief demands are not met. And as if things were not already interesting enough, without the protracted trade war slowing world commerce, glaciating the Chinese economy, a feared flagging U.S. economy prompting speculation of the Fed's not only not raising rates but actually cutting them, and the prospect of a truly dazzling spectacle of U.S. presidential race as the blue and the red line ranking up for what may be the fight of the century. Whither now, bull market? Onto this field of danger and uncertainty, where will you wander? Not only have times got suddenly scary, but many pundits have branded this bull market record-age beef, soon to stumble into the barbecue pit. No less than the Wall Street Journal's Jason Zewig has recently declared, "This bull market for U.S. stocks is by far the longest on record, and only a lunatic would think it can last indefinitely." The implication being, of course, that stocks have been going too high too long and are bound for a must-go-down fall. Without question, stocks, especially U.S. stocks, have been on a tear since the big Great Recession bottom in March of 2009. The over 325% rise since then seems meteoric and inevitably smooth by the hardwired cognitive functioning of the human mind. It can seem to have been a pretty much straight path up. Of course, and all you have to do is run an S&P or Dow Jones Industrial Average graph, the reality has been anything but smooth. There have been numerous crashes and meltdowns and corrections along the way. There have been bumps aplenty, and while none have been technically meeting the academics and journalists' arbitrary definitions of what a bear market must be, there have been jarring drops and crashes that unquestionably meet the emotional definitions of corrections and bear markets, if not the absolute technical textbook ones. Just check your shins and look for scars over the past few years. Of note, those textbooks are not active market participants, just us, emotion-crazed human beings, us players, those that actually invest our money in stocks. For me, the late 2018 Christmas crash, just last December, actually just last fall into December, certainly qualifies as a bona fide bear market. While on a closing basis, the S&P 500 only dropped 19.8%, instead of the official bear market required 20%, the 3-month-long plunge sure scared the bejesus out of enough investors to change their thinking and rewire their expectations. We are very arguably, if not certainly, very arguably in the beginning stages of a brand new bull market. The old bull's jerky, it's a hide hanging on the barn door, and the new one has plenty room to stampede, we think. But will Iran skewer this frisky new critter? Aside from the perfectly reasonable fear that a raging and possibly radioactive regional conflict with a rapid and likely already nuclear-armed foe should inspire, that's pretty scary, the economic risks, unlike those engendered by the tanking Chinese economy, the economic risks of oil blockade basically in the Persian Gulf are fairly limited to oil price effects. Not to discount the damage an intense war in a tightly wound Middle East that could ensnare arch enemies Iran and satellites like Syria and Lebanon on one side and major non-U.S. players like Israel and Saudi Arabia on the other. That's a significant threat. Such a flashpoint could engender untold and unholy consequences that might poison human culture for decades or longer. But the economic consequences are a bit easier to handicap and to stomach. While torrents of oil flow through the Hormuz checkpoint, principally from the Saudis as well as from the United Oil Emirates and Kuwait and Iraq, ignoring, of course, Iran's own sanction production, all of this gush does not equal a combined production of even the world's two biggest producers, the U.S., now number one, and Russia, number two, both of whom could surely benefit from the price spiking a choked Hormuz spigot would entail. Other non-Persian Gulf major producers, and there are at least 17 in the million barrels a day major league, would surely stand to benefit. While higher oil price pressure could surely spur increased costs across the world economies and spark at least some asymmetric inflation, this observer believes the impact would be absorbable and relatively benign. For one thing, a trade war shackled world economic slowdown has depressed demand for oil so much. Right, so again, the trade wars have really slackened world economic activity to the point where oil demand is lower, to the point where OPEC dominated Saudi Arabia, even in the wake of the tanker attacks just this week, is calling for reduced production to shore up prices. Not all are warm to this call. Not all OPEC players are warm to the call, which will surely signal plenty of supply elasticity ahead. The Russians particularly just want to keep on pumping. They're very happy with oil at $60 a barrel. For another elastic thing, world petro supply has never seemed bigger. What with the fracking revolution and the untold riches beneath and around the now unfrozen Northwest Passage, it's a good bet that supply can rise to meet even the shackled demand. Absent a radioactive war in the Mideast, which would ultimately mark the end of the post-Carter Ayatollahs and certainly herald a new age for the new Persian Empire, the economic and financial effects of an Iranian conflict are likely to be muted. Mr. Market seems to agree. On the same day, the U.S. president threatens war with Iran if it tries to get nukes, unquote, the S&P 500 flirted with and nearly closed at a record all-time high. What say the tea leaves about the prospects for a frisky young bull market? Clearly uncertainty and volatility ahead. As has been long said, a bull market climbs a wall of worry. And there is much indeed to worry about in the world, and the new bull will without doubt be taken down a peg or two in the near term. That's inevitable. But long term, prospects seem bright. A deal with China, which is the real cloud over the market, is a virtual inevitability. It simply costs China and the U.S., in terms of prosperity and the political realities of both respective leaders, far too much not to get done and get done soon. Probably in response to the protracted trade war, but intoxicating nonetheless, central banks the world over, not excluding King Fed, seem inclined to ease policy and reduce rates. This should be a tailwind on an already afterburner poised young bull market. While we expect some buffeting and summer doldrums soft spots, we remain convinced 2019 could be a very good year for those that steer their ships wisely. That steer was not another beef pun, by the way. For a white paper by me, if you'd like to read it yourself or pass it on to your friends, go ahead and email me directly at j@camarda.com. I'll be very happy to get you out my 9 dangers facing today's investors and what to do about it. And that's it for this rather expanded midsummer word from Jeff. I hope that you found it interesting. Sorry it was so long. I wish you very placid summer days, cool nights. Until next time, this is Dr. Jeff Camarda.